Well, speaking of rough rides, it was a pretty rough ride on Wall Street on Friday, and that means we're looking at losses in early on trade today here locally. To get across all the details about what to look in the week ahead, Pete McGuire from XM is standing by via Skype. Pete, it's great to go and see you. Could we discuss that inflation report, the PCE deflator that came out on Friday? Because it wasn't just that. We saw big spending increases coming through and also consumer confidence lifting back to multi-month highs.
Well, exactly, David. I tell you what, it was well absorbed by the market. Traders realised, I think the general mood was softer, as we saw as far as US equities for the week. And then I think the mood going forward, how it's going to be managed, that headline that they're saying is going to be about a 5.35% as far as rates when it hits its high in July, and whether that's going to be revised over the next couple of months. So I think we're in for some fun and games for the end of this quarter, naturally in March, and then moving forward to the next quarter. So you don't want to look too far out, but it could be, a fair bit of fun time for traders.
Relative to what we saw last week, the calendar globally is not quite as busy this week, but one thing towards the end of the week has caught my eye because it had a big influence on this uplift in yields we're seeing, and the US dollar, of course, as well, over the past month. The ISM non-manufacturing PMI, the services PMI that's released there, was really, really strong in January, and that sparked this big turnaround we saw along with that payrolls report. How important on this occasion do you think that release will be?
I think very much so. I'm looking at the numbers. You're looking at non-manufacturing going to come in at around about 54.2 according to analysts. And then you've got manufacturing running at 47.9. As we know, anything under 50 is contraction. So we've just got to see how that all rolls and what impact that naturally has as far as market sentiment this week. I keep a close eye on those metrics, and I think every trader does. So I'm looking forward to see what impact it has naturally to US dollar. It's had a nice rally to the upside. You're sitting there at around about 105, 105.50. And I think there could be a little bit further strength over the short term this week. But don't forget what's happening as far as ECB and whether they're going to jack it up 50 or 75 basis points, according to President Lagarde.
Well, let's go down that path and talk about the inflation report that we released. That's one of the other big data points coming out this week. How important is that? Because we're seeing around the world now, not just in the United States, but we're seeing here locally in Australia and other parts of the world, that inflation is now starting to go and print to the upside surprise. So do we expect another occasion like that in Europe?
Well, I think so. I won't be surprised, David. I'm just looking in the Financial Times here. Recession fears on page 4. Recession fears return after German economy shrinks. So, yes, it's when you're looking at that global landscape, and they certainly don't seem to have it under control. I think the saviour at the moment has got to be, you had a warm winter across all of Europe, as we know, and you've got energy prices, $83 for Brent and $76 for WTI. You'd hope to see it with another $10 or $20 loaded on, and in case if you had a war premium or geopolitical tensions roll into it. So that seems to be the saviour at the moment, cheaper energy prices. But if they were to jack up, then I'll tell you what, it'll really create much havoc leading into that second quarter of 23.
Pete, you're a trader. You're a multi-asset trader as well. You can go directionally as well, both long and short. At the moment, what are some of the favourite trades out there, given we're seeing a pickup in volatility again?
Well, we're keeping a close eye on yen, David. I mean, that's been outstanding over the last couple of weeks. You got a 136.50. We're down at 128. So think of the movement you've seen there, and then if you really look back to October, it's just been dramatic. Then you're putting, the Aussie's been outstanding. I'm not going to go there on the equity side, but traders are certainly looking at that from the indexes of what they're shorting. And then have a look at, of course, gold. I mean, 18.17, it's tanked. So there's plenty of movement, and oil's been outstanding from a trade perspective because those really big swings. So, there's no shortage of movement. Everyone's also, riding the euro at the moment at around about a 105.50. So you could see that take a little bit of a move to the upside this week with President Lagarde's comments. So, plenty of movement. It's dynamic, and it's something that you can do 24 hours a day, David. There's no shortage of opportunity.
Yeah, absolutely. Look, one thing that a lot of people are paying pretty close attention to at the moment is the bond market. It's still back in the driver's seat. Again, we're seeing a big lift in the yields across the entire curve, particularly at the front end. Where do you think at this point in time the path of least resistance is? Because we're seeing a big rebound. A lot of it's being based off data from 1 month where there's a lot of seasonal adjustment aspects to it. Do you think there's still more upside to come, or do you think we've maybe run too hard too fast here?
Oh, David, it's a very difficult one to. It's easy for me to sit in my seat, but central bankers have got their hands full with all of the data coming in and how they're going to manage this, from housing to construction and the impacts just domestically, let alone how it rolls globally. So the major story in everyone's eye is inflation and how that's going to be managed or contained. And it seems to be a wild tiger at the moment. They're trying to put it in a cage and it seems to be biting everyone. So we've just got to work through that and see how it impacts as far as bonds, and naturally the impact, well, if that rolls across to consumer spending, what happens with retail sales, and this is globally, and that's why this year is going to be not short of opportunity. And I think this could be better than last year as far as what we saw with those big themes playing out and what impact it has to traders.
Yeah, I can feel all the traders' ears prick up when you just go and say that. Pete, fantastic to go and kick off the week with yourself. Have a great one. We'll catch you soon.
Take care, David. Thank you.